We will now look at the rates of tax. Income tax is charged at the rates prescribed by the Finance Act. And what are the steps? First, we compute the tax on the total income as per rates which are prescribed by the relevant Finance Act. Then we allow the rebate under section 87A if it is available, or add surcharge if it is applicable, adjusted for marginal relief if available. Rebate and surcharge cannot be applied at the same time because rebate is not available where total income is more than rupees 5 lakh, while surcharge becomes applicable where total income is more than rupees 50 lakh. To the balance, we add HEC or health and education cess at the rate of 4%. Tax payable is rounded off to the nearest multiple of rupees 10, and the steps are the same as that we have noted for the total income. What are the rates of tax for individual, HUF, AOP, BOI or AJP, artificial juridical person? It depends on the level of total income. In a normal case, for an individual HUF, AOP, BOI or AJP, the tax rate is nil if the total income is up to 2,50,000. Where total income is more than 2,50,000 and up to 5 lakh, the slab rate is 5% and tax is equal to 5% of the amount by which total income exceeds 2,50,000. Where total income is more than 5 lakh and up to 10 lakh, then the slab rate increases to 20% and tax is equal to 12,500 plus 20% of the amount by which total income exceeds 5 lakh. Where total income is more than 10 lakh, the slab rate is the highest rate of 30% and the tax is equal to 1,12,500 plus 30% of amount by which total income exceeds 10 lakh. In the case of a senior citizen, and who is a senior citizen? Senior citizen is a resident individual, not a non-resident, and therefore HUF, AOP, BOI or AJP cannot be categorized as a senior citizen. So a resident individual who is 60 years or more but less than 80 years of age at any time during the previous year, the slab rate is nil for total income up to rupees 3 lakh. For total income which is more than rupees 3 lakh and up to rupees 5 lakh, the slab rate is 5% and tax is equal to 5% of amount by which total income exceeds 3 lakh. Where total income is more than 5 lakh and up to 10 lakh, the slab rate becomes 20% and tax is equal to 10,000 plus 20% of amount by which total income exceeds 5 lakh. Where total income is more than 10 lakh, the slab rate is the highest rate of 30% and tax is equal to 1 lakh 10,000 plus 30% of amount by which total income exceeds 10 lakh. Super senior citizen is a resident individual who is 80 years or more at any time during the previous year. In such case, the slab rate is nil for total income up to 5 lakh. Where total income is more than 5 lakh and up to 10 lakh, straight away we move to the slab rate of 20% and tax is equal to 20% of amount by which total income exceeds 5 lakh. Where total income is more than 10 lakh, then the slab rate is the highest rate of 30% and the tax is equal to 1 lakh plus 30% of amount by which total income exceeds 10 lakh. Now, what if the date of birth of a person is 1st of April? So, if a person was born on 1st of April, when would he complete a particular age? On 1st of April or on 31st of March? So, he completes a particular age as on 31st of March. That is the day preceding his birthday. For reference, you may note the cutoff date of 1st April 1963 for a person to become a senior citizen and 1st April 1943 for a person to become a super senior citizen for previous year 22-23. The basic exemption limit therefore is 2.5 lakh for a normal case, 3 lakh for a resident senior citizen and 5 lakh for a resident super senior citizen. We now look at the rates of surcharge, marginal relief and HEC in the case of an individual HUF, AOP, BOI or AJP. We need to note that the rate of surcharge cannot exceed 15% in the case of 1. Dividend or 2. Capital gains which are taxable at special rate. That means under section 111A, 112 or 112A. This is the table which we can use to determine the rate of surcharge. We need to bifurcate the total income into 1. The amount of dividend 111A, 112 and 112A income and 2. Quantum of other income. Where the total income is up to rupees 50 lakh, surcharge is not applicable. Where the total income is more than 50 lakh and up to rupees 1 crore, then the rate of surcharge is 10%. Where the total income is more than 1 crore and up to 2 crore, the rate of surcharge is increased to 15%. Where the total income exceeds rupees 2 crore, but the other income is up to 2 crore, then the rate of surcharge remains at 15%. But in such case, where the other income is greater than 2 crore and up to 5 crore, then the rate of surcharge on tax on the other income increases to 25%, but it remains 15% in the case of tax on dividend 111A, 112 and 112A income. Where the total income exceeds rupees 5 crore and the other income is greater than 5 crore, the rate of surcharge on tax on the other income is the maximum at 37%, but it remains limited to 15% for tax on dividend 111A, 112 and 112A income. Now, marginal relief is supposed to be checked, and if marginal relief is available, then the amount of surcharge needs to be restricted. To compute marginal relief, we need to compare A and B. So A is what? First, we need to compute the tax and surcharge on the total income without marginal relief. That means as per the normal method, right? We figure out the tax and basis this table, we figure out the rate of the surcharge, we compute surcharge and we determine the amount of tax plus surcharge. B, we compute the amount as per the formula given in the table above. So this is the formula. So we compute this particular amount. So where the surcharge becomes applicable at the rate of 10%, we compute tax on 50 lakh plus within brackets total income minus 50 lakh. Where surcharge gets increased to 15%, we compute tax plus surcharge on 1 crore plus within bracket total income minus 1 crore. Where the surcharge increases from 15% to 25%, we compute the amount which is tax plus surcharge on 2 crore plus within brackets total income minus 2 crore. And where the rate of surcharge increases to 37%, we compute the amount which is tax plus surcharge on 5 crore plus within brackets total income minus 5 crore. So this is B. And now we ensure that A does not exceed B. In other words, we take the lower of A or B. If A exceeds B, that becomes the amount of marginal relief which we provide, and therefore the lower of A or B becomes the final amount of surcharge which we need to apply. In this table, for your reference, these are the approximate range of total income to check for marginal relief. So where the total income exceeds 50 lakh or 1 crore or 2 crore or 5 crore, then you need to check if marginal relief is available for a total income ranging up to 52 lakh. That means from 50 lakh to 52 lakh, up to 1 crore 3 lakh, 2 crore 10 lakh and 5 crore 31 lakh. These are the approximate ranges, but these are given for your use. These will help you because for reference purpose, you can use these to check for marginal relief. That means if total income is beyond this range, then you need not spend your time checking whether marginal relief will be available in that particular case in the question. HEC is levied at 4% of tax and surcharge in all cases irrespective of the total income. So we compute tax, we compute surcharge on tax, then we aggregate tax and surcharge, and then we apply HEC to that amount. Rebate of tax in the case of certain individuals is provided under section 87A. It is allowed to a resident individual whose total income doesn't exceed rupees 5 lakh. So this is the threshold of total income. Rebate is allowed before adding HEC. So first we compute tax on total income, then we allow rebate, and to the balance we add HEC at the rate of 4%. Rebate is equal to lower of tax on total income or 12,500. So 12,500 is the maximum amount of rebate. Rebate under section 87A is not available from tax on LTCG under section 112A. Now we look at the rates of tax for other persons. That means other than individual, HUF, AOP, BOI or AJP. Cooperative society. Total income up to 10,000, rate of tax is 10%. Total income more than 10,000 and up to 20,000, 20%. Total income more than 20,000, 30%. Rate of surcharge, nil for total income up to 1 crore. 7% for total income more than 1 crore and up to 10 crore, and 12% for total income more than 10 crore. In this case, we need to ensure that the tax plus surcharge does not exceed tax on 1 crore plus within bracket total income minus 1 crore. And therefore, we allow for marginal relief to restrict the tax plus surcharge to this level. In this case, we need to ensure that tax plus surcharge doesn't exceed tax on 10 crore plus within bracket total income minus 10 crore. HEC is then added at the rate of 4%. For a firm, 30% flat rate of tax is applicable. No surcharge up to total income of 1 crore and 12% for total income beyond 1 crore, in which we need to check that tax plus surcharge doesn't exceed tax on 1 crore plus within bracket total income minus 1 crore. HEC at the rate of 4% is applicable. Similar is the position in the case of local authority. So rate of tax and surcharge and the formula for marginal relief is the same for local authority and a firm. As far as company is concerned, if the company is a domestic company, then where the total turnover or gross receipts in the previous year 2021, here we are looking at the rate applicable for previous year 22-23. But what we need to check is total turnover or gross receipts in previous year 2021. If that is not greater than 400 crore, then the rate of tax is 25%, else it is 30%. No surcharge for total income up to 1 crore, 7% for greater than 1 crore and up to 10 crore, and 12% for greater than 10 crore. And these are the respective formulas for checking for marginal relief. And HEC is at the rate of 4%. If the company is other than a domestic company, then 50% rate applies in the case of royalty or FTS in certain cases, and on the balance of total income, 40% rate applies. Surcharge is nil for total income up to 1 crore, 2% for greater than 1 crore and up to 10 crore, and 5% for greater than 10 crore. And these are the respective formulas for marginal relief, and HEC is at the rate of 4%. There are certain special rates of tax applicable as far as capital gains is concerned. These are taxable at special rates under these three provisions. Under section 111A, short-term capital gain on transfer of equity share in a company or unit of equity-oriented fund, a concessional rate of 15% applies. Concessional rate of 15% applies. But where it is a case of long-term capital gain, then the LTCG in excess of rupees 1 lakh is taxable at a further concessional rate of 10%. In the case of other long-term capital gain, that means which is other than 112A, section 112 applies and the rate of tax becomes 20%. In each of these cases, the surcharge rate is as we discussed above. The surcharge rate cannot exceed 15% as we noted above in the case of individual HUF, AOP, BOI or AJP. And HEC in all these cases is at the rate of 4%. Section 115BB covers winnings from lotteries, races, games, etc. It is taxable at a flat rate of 30% and surcharge rate is as we discussed above. HEC is at the rate of 4%. The unexplained money, investment, expenditure, etc. under section 68, 69, 69A, 69B, 69C, 69D is taxable under section 115BBE and it is taxable without any deduction of any expenditure or allowance or set off of any loss. So gross amount is taxable at a flat rate of 60%, to which we apply the rate of surcharge at 25% and 4% HEC on tax plus surcharge. As far as buyback of shares by a domestic company is concerned, the domestic company is supposed to pay tax on distributed income under section 115QA, which is called buyback tax. Shareholder is not taxable. And the buyback tax is at the rate of 20% of distributed income, to which surcharge at the rate of 12% is applicable, and HEC at the rate of 4% of tax and surcharge. Now, the benefit of unexhausted basic exemption limit is applicable while computing tax on capital gain, which is taxable at special rate. That means under section 111A, 112A, and 112. We will talk about this in detail in the capital gains. Deduction from gross total income under chapter VIA is not available in any of these cases because these incomes are taxable at special rate. Rebate under section 87A is Not available in the case of long-term capital gain under section 112A, but it is available in other cases. It is not relevant in the case of buyback tax.